Hey everyone, welcome back to Chainlink Explained Daily. Chainlink has entered a critical phase in its market cycle as bearish pressure intensifies across the broader crypto ecosystem. After failing to hold the $14 support level, Link slipped to lows near 13.45s, signaling growing weakness among buyers. This decline comes at a time when Bitcoin has dropped below $95,000 and altcoins across the board are facing heavy selling. The shift in sentiment is especially notable considering Chainlink's strong performance in August, when the token surged above $27 before losing momentum in early October. A sharp 21% crash on October 10, 2025, disrupted the uptrend entirely, pushing Link into a steady downward trajectory that has continued for weeks. One of the clearest indicators of sustained selling pressure is the spike in trading volume. Over the last 24 hours, Chainlink's volume surged by nearly 60%, crossing $837 million. Rising volume during a market decline typically reflects strong conviction among sellers, and this appears to be exactly what's happening as Link breaks down from a symmetrical triangle pattern. The increased volatility accompanying this pattern suggests that more downward movement may lie ahead unless bulls regain control quickly. Technical indicators are also aligning with a bearish narrative. A potential death cross, where the 50-day moving average moves below the 200-day, is now approaching. While a death cross is a lagging indicator, it often confirms the start of a longer-term downtrend. Momentum indicators further support the bearish view. The Relative Strength Index, RSI, has fallen below the neutral 50 level and is approaching oversold territory around 36, highlighting weakening buyer strength. The MACD also remains firmly bearish, with a negative histogram and the MACD line positioned below the signal line. In terms of price structure, Chainlink is now hovering near one of its most important short-term support zones. If the token fails to hold the $13 psychological level, the next major demand area lies between $11.77 and $10.97. This zone acted as significant support earlier in April and June 2025, and may once again draw buyers into the market. However, if this level breaks, Chainlink could fall toward its multi-year support near 8.50 cents, marking one of the deepest corrections the asset has seen in recent years. Despite the growing bearish momentum, a bullish recovery scenario still exists, but it depends entirely on Link defending the $13 region. If bulls manage to stabilize the price, the first upside target will be around $15.55. This level previously served as a major turning point during the last golden cross, which propelled the token above $20 and eventually to August highs. A breakout above this resistance could shift short-term sentiment, though reaching this point will require significant buying support. Meanwhile, the broader market continues to influence Chainlink's movements. Bitcoin recently slipped below the 50-week moving average, triggering fear across crypto markets. A drop under $95,000 ignited widespread selling, affecting altcoins particularly hard. Interestingly, despite the negative sentiment, major institutional players appear to be accumulating Bitcoin. Michael Saylor's company, for example, recently purchased 8,178 BTC, bringing total holdings to over 649,000 BTC, worth more than $48 billion. This suggests that long-term confidence remains intact, even as short-term volatility persists. Chainlink stands at a crucial point. The next few sessions will determine whether the token finds support at $13 and attempts a recovery or continues sliding into its broader support zone near $11. While the technical picture currently leans bearish, crypto markets are known for sudden reversals, and Link's next major move will depend on how bulls respond at this key level. Staying cautious, informed, and aware of market trends is essential as the situation develops.